Hello friends, how are you? Our today's topic of discussion is 5 steps formula to help you get started in the stock market. So let's start. Once you determine which business cycle the economy is currently in, you can start researching for a trade. It is best to have some sort of system in place that will be used before each trade. Here is your 5-step simple formula to help you get started. Step number 1. Find the stock. This is the most obvious and most difficult step in stock trading. With over 10,000 stocks to trade, a good rule of thumb to consider is time of the year. For example, as I discussed this, it is the beginning of summer. It would make sense to consider stocks that traditionally make runs or slide if you are bearish during this time of the year. Rule number 2. Fundamental analysis. Many short-term traders may disagree with the need to do any fundamental analysis. However, knowing the chart patterns from the past and the news regarding the stock is relevant. An example would be earnings season. If you are planning on playing a stock to the upside that has missed its 3 earning quarters, caution could be in order. Technical analysis. This is the part where indicators come in. For example, stochastics, the MACD, volume, moving averages, RSI, CCI, support and resistance levels, and all the rest. The batch of indicators you choose, whether lagging or leading, may depend where you get your education. Keep it simple when you're first starting it out. Using too many indicators in the beginning is a ticket to the land of big loss. Get very comfortable using 1 or 2 indicators first. Learn their intricacies and you will be sure to make better trades. Number 4. Follow your picks. Once you have placed a few stock trades, you should be managing them properly. If the trade is meant to be a short-term trade, watch it closely for your exit signal. If it's a swing trade, watch for the indicators that tell you the trend is shifting. If it's a long trade, remember to set weekly or monthly checkups on the stocks. Use this time to keep abreast of the news. Determine your price targets, set your stop losses, and keep an eye on other stocks that you may want to own as well. Number 5. The big picture. As the saying goes, all ships rise and fall with the tide. Knowing which sectors are heating up stacks the chips in your favor. For example, if you're long, expecting prices to go up on an oil stock, for example, and most of the oil sector is rising, then more likely you are on the right side of the trade. Several trading platforms will give you access to sector-wide information so that you can get the education you need. Thank you for watching.